Global markets and the crypto market continue to struggle a bit, but there is hope. I have Tom Dunleavy at Messari, one of the best firms for data analytics and research in the crypto space. Of course, here going to present his thesis for what's going to happen for the rest of the year, do a deep dive into inflation and macro. Really interested to see what they've got going on and what he is thinking. You guys don't want to miss this. Let us go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Street. Before we get started, please subscribe to the channel, and I guess just tap the like button because I'm too lazy to tell you to do anything creative with it. Hope you guys are having a wonderful morning. I rolled my ass out of bed with 103 fever this morning to go on CoinDesk at 9 a.m. and they messed up the date and it didn't happen. It's pretty awesome. Pretty awesome morning, I would say. That's going pretty well. But then I got hopped up on some Tylenol flu, and I'm feeling great. I'm feeling great and ready to talk to you guys about what is going on in the markets. Now, usually, listen, we used to do Chartapalooza, obviously, on Tuesdays when I would just look through a bunch of charts. I think we know that looking at 30 altcoin charts right now is a useless waste of our valuable time, right? When we're in this sort of risk-off environment, Bitcoin's looking shaky. Well, what happens is everything goes down together. And so there's basically no point in looking at that until the market starts to turn around, in my humble opinion. So we're going to take a look today at macro. But first, I want to tell you guys, so you probably noticed Bullish, the exchange, has been a sponsor of my podcast for a long time, for about 3 months, actually going on 4 months now. Well, now, as I told you before, we're trying to align, done a 1-year sponsorship with Bullish that's going to be on live streams and podcasts. I told you I only want to have very few sponsors and approach it that way, and they are absolutely awesome. I spent probably like 20 hours with their team in Miami, and before on calls, I've done a full walkthrough of the platform. I didn't ride their bull. They had a bull you could ride in Miami that was pretty awesome. But yeah, and I'm pretty sold. Unfortunately, I can't use it as an American, of course, but you know, it's everything you'd want from both a centralized and decentralized exchange. Full, robust order book, deep liquidity, all of the complex orders that you get on a centralized exchange, but you get, you know, not your keys, not your coins. It's really amazing. So that's actually a decentralized exchange. You get all of those benefits as well. And pretty soon you'll be able to add liquidity and earn a pretty significant yield. So you guys check them out, bullish.com/Melker. As you can see, I'm sounding very, very good. So guys, I'm going to go ahead and just get right to it right now. I'm going to bring on Tom Dunleavy from Messari. I wanted to surprise you, catch you like looking down or something, but I didn't. How's it going today, man?
Doing well. Sounds like I'm doing slightly better than you. I think my fever's under 100 at the moment. So
well, keep that temperature down.
You're a trooper. Yeah.
Absolutely. All right. So listen, you obviously work at Messari, and I've made the joke over and over again. Everyone I met in person is way taller than they were on Zoom, and Selkis is like 6'5".
He's got a lot of inches on me. I'm only about 5'8" too. So this is why I stay behind the computer for now.
You're not actually a giant.
No, not actually a giant. So Mr. Selkis is getting that for all of us.
Yeah. So listen, man, you've obviously senior research analyst at Messari, which means that your job is to be fully down all rabbit holes at all times, I would imagine. Which means that you've sort of formulated quite a thesis for what's happening with macro and where crypto fits into that. So I'm literally just going to bring up your screen and save my voice and let you go for a minute.
Yeah, appreciate that. So actually, background prior to Messari was in the traditional finance side, focusing on macro. So I think decent background to kind of talk about this stuff, but we'll relate it back to crypto. And I hope your listeners won't be too bored talking about actual components of some of these pieces, but I think it's important to figure out where we're going here. So crypto follows macro. I think we all understand that. Correlations for BTC and ETH are 40, 50%, correlated with the S&P and NASDAQ. Macro's down now strictly because we have, rising rates, tightening, And we're looking at, really tough inflation numbers. But I think we're nearing the max pain right now. Maybe we have another 5% to go or so. I think we're in for sort of choppy markets the rest of the year, but I'm still bullish on crypto. So why do I think we have max pain in the regular markets? It's the worst quarter really for bonds essentially ever. That means all those ever. We're one of the top 5 quarters for bonds ever, worst quarters for bonds ever. So funds, traditional pension funds, what they do every quarter is they rebalance, and there'll be huge flows coming in over the next few quarters or next few months. We also have 10 rate hikes priced in, 10, and $100 billion a month in maturing debt upcoming. So a lot of sort of monetary policy things that are going to be happening. And you're saying, wow, that sounds really bad, right? But if you look at rates in the market, if you look at the 10-year yield, which is sort of what the risk-free rate is sort of proxied at, those rates have already come up to where the short-term rate that the Fed will be raising is going to be. So we've already seen the market price in a lot of this, almost all of this. And you could see this morning. We had something called the producer price index, which is not the CPI that you all know, but for the prices for producers, the people who are having the input costs. And you saw that number actually exceed the expectation. Generally, that would be negative, but you saw the market essentially unchanged this morning. And what that tells me is really, the Fed thinks the market thinks the Fed has kind of got this now. They understand we're going to hike 10 times and run off the balance sheet and do all this crazy stuff.
It would seem that the stock market believes that the Fed has this under control.
At this point, it seems like
believes.
Yes, believes. So, what can the Fed do, right? When we say the Fed has this under control, the Fed can hike rates. So what does that mean? That means we're going to, try to cause a recession and reduce demand. That's essentially really the thesis, and slow down the overall economy or come close to causing a recession, right? We had Fed governors actually say this. We had a former Fed governor, Bill Dudley, actually come out and say it's a foregone conclusion we're getting a recession. So that's pretty serious talk. What can't the Fed do, right? What can't the Fed do to control inflation, which is the input to, where interest rates are going? It can't fix supply chains. It can't reduce energy costs, and it can't stop, the federal government from printing sort of more money and handing out checks, right? It can't do any of those things. So I say all those things to say, I agree with the Fed in saying inflation is transitory. Cue the groan from everybody, right? Why is that? Why is that? I know. There you go. There's the audible groan, right? So we have, CPI up here. This is what you see when you see, inflation. I think inflation, everyone says they know what it is, but it's really hard to sort of quantify, right? So CPI is what you'll see on TV. The Fed uses a measure that's very similar to this. It's called PCE. And what that means is really they strip out more volatile stuff like energy and food, and they allow things for substitution. Like if you were going to go buy steak, the Fed says maybe you buy chicken instead if steak is too expensive. So what does that really mean? And you see, if you're looking at the actual basket of what inflation is, you see that big blue chart, that big blue part, that's housing, right? And I don't think it's any sort of surprise to anybody that housing prices have been going through the roof. And so why have housing prices been going through the roof? Why have general prices been going through the roof when, I think everyone says, money printing causes inflation. And in 2008, we did the same thing, but we didn't get any inflation. So what happened? We had direct stimulus payments. We had direct checks to people, right? And you can see this in the numbers. You can see this in something called transfer payments data that the Fed publishes. And that actually shows we had, 30% spikes in these payments to people and their overall income, right? If you're getting 30% more money, you're going to go spend it or you're going to save it. But eventually that money has to go somewhere, right? And those numbers have come way down. People have started to spend all of that extra money. And what's the other thing that's going to cause sort of more payments in the economy is wages going up. You've seen these crazy stories like, Walmart truck drivers getting paid like $100,000.
Can't get anyone to work.
Just to get people off the sidelines. Exactly. And it's interesting, right? Because part of that is like the shrinking pool of people who actually want to work. It's people retiring early. And you can look at this in something called the participation rate. You can see that the number of people who are actually participating in the economy is getting smaller and smaller and smaller. So, and the wage numbers, they're tracked month over month have just continued to go up. But that's sort of reversed now. We're actually seeing negative wage numbers on the shorter term indicators if you look at the weekly indicators. So it's really come down. And all of that money is feeding into higher prices, right? It's feeding to higher housing prices. It's feeding into higher, car prices, food prices, etc. So if you look at the housing prices, right, this is the biggest piece of that pie, and you'll notice transportation is the second biggest piece. Let's flip on to the next slide here. Housing, 40% of CPI, and housing is unaffordable. Housing is unaffordable. This right here, you'll see we have a record affordability crisis. We're basically as unaffordable as it is ever to buy a house.
Yeah, and now rates are higher.
It's like you were looking at my next slide. So
yeah,
so this is rates inverted, right? So you'll see 5% here. So this is 5% rates on a mortgage on 30-year, which is brutal, right? I mean, we haven't seen that for, over 10 years. This green line is something called Case-Shiller, and that it takes 20 cities across the US, and it tracks the average house price in those 20 cities. No surprise, this is the rate of change going up. You're up almost 20%, in the past year or so. This green line should follow the rates line down, right? So what does that mean? It doesn't mean that housing prices are going to zero. It just means that they're going to stop going up. And if they stop going up, inflation stops going up. So we're going to see likely a huge amount sort of stagnation in housing prices in some regard, just because houses are unaffordable, rates make that even more so. And then you have less payments and less savings that people have sort of accumulated over time because they've spent all of that, right? Another piece of inflation, which I showed in that other chart, is transportation costs, right? You've heard these crazy stories about used car prices. You probably even tried to go buy a used car yourself.
Oh man, I sold back a car for like 20 grand more than I bought it for 3 years ago. Yeah.
Talk about arbitrage, right? Don't worry about
drive a car for free for 3 years and get a check back. Yeah.
Yeah. Don't worry about drawing lines on charts. Just, buy some used Chevys, right? And it's like, it's crazy. This was actually contributing 1% to 2% of that like 8% number you're seeing on CPI right now is actually the transportation costs. So this is on the charts here. You'll see some of the used car prices that's actually embedded in CPI, and that's that purple line. The black line leads it. That's like used car auction prices. So that's where your used car dealership is actually paying for the car before they sell it to you. So you'll see that on the right side, those numbers are actually going down. So transportation costs are actually going to be a negative part of CPI. So you have housing coming down, you have transportation coming down. That's 50% of inflation that's going to be going from double-digit increases to flat or decreases in the next few months. So where does that sort of leave us, right? That leaves us at something like 3% inflation by the end of the year. So you can see over here in this part of the chart, we'll eventually get down there. So if you break down the components, what the Fed is saying is, I dare say, almost reasonable, right?
Except for the fact that they've said that they gave up on the transitory narrative, right? But
yep, that's certainly.
I think that was political pushback. People were just so pissed that they kept hearing it, right?
Well, yeah, and I think that goes back to like we're so short-term focused, right? And everyone is, right? Like, we're on Twitter all day, where like, everything happens in half a second on the internet. Like, could you imagine like back in the day, if you said, inflation is going to be a little higher for a year, but it'll eventually go back down, right? People have been like, oh, a year, that's no big deal, right? I mean, we had inflation numbers in like the mid-teens in the 1970s, right? And people just kind of sucked it up for a while. But we live in such an instantaneous, like quick environment. Like if you said, like if I asked you for the definition of transitory, it's really hard to say what it is, right? The Fed might say it's a year. And if inflation lasts for a year, maybe that was transitory, right? It's all based on who you're talking to, which is a challenge as well.
Yeah, I just don't remember a time that used cars were more expensive than you bought them for 3 years ago. That one really sticks for me. And yeah, and obviously housing prices are just absolutely out of control. It does feel like they've lost control of it, but you actually have the data to show that maybe they haven't. We're so used to railing against the Fed here. You can't say nice things about the Fed, Tom.
I know. So I came on and I knew I was going to be in trouble immediately. No, but I'm going to land the bus. I'm going to land the plane here, I think. So all of this means, right, likely that we're going to be in a really bearish sort of macro territory because the Fed is going to really hike rates in the face of all these things. And that could break things, right? That's happened many times before. And if you look at, charts of other Fed rate hiking cycles, it almost always coincides with some sort of crisis. So, we'll see if they can land the plane this time. But I think, it's going to be the next quarter or two is going to be sort of challenging overall in the macro environment. But I think that, crypto is finally standing on its own enough that it could potentially decouple in the second half of the year and really have sort of a bullish run on its own.
I agree with that. And I think that, if you zoom out, crypto's largely been decoupled, right? So I think that when they trade together is relatively infrequent when you zoom out to the total. Also, we're in an election year. They're not gonna let everything die come November. Everyone will lose their job.
That's the sneaky, the Fed says they're independent, but it's all a political game, right? Part of it, who appoints the Fed chair and, all that good stuff. It's, and you can see it now with, what did they call it? The Putin price hike with Jen Psaki coming out saying that, which is, obviously garbage if you look at the data, but, they have to spin it because inflation is on the mind of every consumer and it's in every survey. You see the biggest thing people care about is price hikes, right? And what are they going to do is just vote against the people who they're perceiving, sort of have the power over these price hikes.
Yeah, you've talked about the price hike cycles in the past. I don't remember the stats, but like 11 out of the 12 since the 50s, basically the first 2 quarters suck and then markets correct and do actually quite well for the entirety of the rest of the cycle. So it lines a lot up with kind of what you're saying is that for the first half to 3/4 of the year, things are bad. And then we sort of, accept it and move on and things improve.
Yeah, I think that's exactly right. The market's sort of a 6 to 9 month like forward looking mechanism, right? And you could see sort of in those rates that I mentioned earlier that's why the 10-year is spiking, right? It's already at 2 and 3/4 almost percent. That's where the Fed is going to be at the end of this hiking cycle potentially in the short term rates. So that's essentially pricing everything already. So there could be a lot of chop the rest of the year, and I think particularly for crypto, until we fully decouple, it's going to be a lot of chop until the merge, right? I think the merge is just going to bring some ridiculous sort of bullish narrative, not only for, the folks who have been waiting for it to come for so long, but for institutions, right? And, I think a lot of folks talk about the institutional demand, but, what coming from someone who advised institutions in the past, they need to see certain things before they're actually willing to make an investment. I worked at a firm that had, advised $1 trillion in assets and 200 plus institutions. And I think 2 of those had like crypto exposure. Maybe like 10 of those were actually interested in hearing about crypto. And it's because in their mind, it's risky and it's not really yielding them anything, right? Up and above what they can get in other asset classes, right? They can just plug the money in private equity and get double-digit returns. So like, why are we even doing this? Like, why are we taking the risk? And the thing that like needs to flip that narrative is frankly another big price and price jump for them to have to consider, right? These guys are these are fiduciaries who have to look at all of the best investment options for their clients or for their pensioners or whoever they are. And if they see something that's, going up 20, 30%, they have to naturally just ask questions and consider why is that not in the portfolio? And the risks so far have been such that they've been able to say like, hey, that stuff is, whatever, rat poison, like Charlie Munger and Warren Buffett want to say, like, stuff is just going up because it's speculative, right? But I think that the merge really flips that, right? Because like all that tech risk is gone. All of that sort of, whether you believe it or not, or think it's true or not, that proof of work, like environmental narrative is gone. And all of a sudden you have sort of this asset that yields something like whatever, 9 to 12% that folks are expecting. And it not only becomes like a bond-like asset, it becomes a green bond, right?
So yeah, this is like the Arthur Hayes, obviously, he kind of went deep on this, looking at it as a commodity-linked bond.
Yeah, but I think it's further than that, right? It's not just a bond, it's a green bond. And what do these guys need? They need ESG and they need bond-like assets. So I think it just becomes like, both of those things together for them. And they're like, okay, how do we not have at least some Ethereum or other proof of stake chains?
Yeah. And the yield will be a lot more secure, right? A 10 to 15% yield that's locked in the contract seems pretty attractive to me, right? And I think that institutions are going to see that carry trade and salivate.
Totally. And, what does that do for crypto, right? We have, if you just look at the numbers on the sidelines, I don't know if I'm still sharing my screen here, but let me
There you are. Still got it up. I wanted everybody to just stare endlessly at your pie chart.
At CPI, God.
Yeah.
I came to listen to a crypto podcast or crypto stream this morning, and I heard about CPI. I'm sure that's.
We don't just talk crypto. It's actually perfect. And it's nice to have a little bit of a perspective. Yep.
Yeah. I'm just playing. So, yeah, just okay. What does institutional demand mean, right? And I put this chart together about a month ago now, but you can see even just a 1% allocation from institutions. So that's pensions, sovereign wealth, endowments, essentially doubles the crypto market cap.
Yeah.
And you can obviously tick those numbers up as much as you like, but the actual demand is just going to really incrementally add to the aggregate crypto market cap. So whether or not that goes all to Ethereum or Bitcoin or sort of takes the long tail of assets down remains to be seen, but it's going to be good for the industry.
I'm just reading the comments over here, and this dude just said to stake your wife and earn more wife, and I was laughing like on the side. Yeah, stake your wife, earn more wife. I think people are probably satisfied with one wife, obviously. Yeah. So I mean, it sounds like you're pretty bullish, which I like. On crypto.
Absolutely. I think that these narratives feed on themselves, right? Like once a few institutions start to do it, and once the correlations start to actually play themselves out a little more, it becomes like a self-fulfilling prophecy, right? I think the hardest part for a lot of institutions, aside from like the tech risk and all that other stuff, is actually seeing like, how does this stuff perform in like interest rate on, off environments, inflation up, down? Like they need that stuff to like frame it in the portfolio context. And like the longer time series you have of good data and positive data, the easier it is for them to make the case to actually include a lot of these assets. And they need investable vehicles to do it, right? Like, I'm sure
an ETF would be nice, but that's not happening.
Good Lord. No comments on that one. Eventually we'll see if that comes online, but I'm just even like hedge funds and VCs have been raising like absolute mad, right? I mean, you have like almost $100 billion between those two in the last year that have dry powder.
Yeah, it's like every week it's like somebody raises 1.5 billion and then their like cousin Ray leaves and gets his own $700 million fund, and then like their cousin leaves and gets a $300 million. Look, I mean, right here, look, this isn't that, but I mean, Circle 400 million today. BlackRock. I mean, this is obviously different. It's not venture capital necessarily, but BlackRock is going to basically custody the assets that are backing USDC. I mean, BlackRock's the biggest asset manager in the world, right?
Yeah. So one of the general bullish things I have about institutions coming in the space too is like you need that institutional level of custody to also be comfortable, right? So not only BlackRock's got in, but State Street and BNY Mellon, the two other biggest custodians in the world, have actually set up shops. They're taking, crypto deposits now, and they're setting up whole trading arms around that. So the whole space is becoming institutionalized for actual asset management, which
I should clarify. It says they're going to manage the assets, not custody them per se. BlackRock. Yeah.
Yep. So, but yeah, everyone's on board, right? All institutions are like, yeah, this is the next thing, right? I mean, it's kind of crazy in the traditional finance world. You're fighting over like basis points at the end of some like crazy ARB spectrum and like trying to outtrade like Jim Simons and his computers from Renaissance Technologies. Like, why not just shift over to crypto, make it a little easier? There's all white space here. There's plenty of room to make profit. And it's just like, let's just get over the regulation. Let's just get over like the hurdles of potentially losing the assets, which custody obviously does, and that the merge tech debt elimination does, and all systems go.
Awesome, man. Well, listen, I'm gonna let you go. I don't feel like great. I'm gonna do like 5 more minutes, and then we're gonna get out of here. I appreciate it, guys. Where can everybody follow you, Tom? On I did something wrong. Where can everybody follow you on Twitter? It's Dunleavy89.
Correct. At Dunleavy89. And you can find me at Messari.io and all of our great research and team over there.
Yeah, guys, Messari is incredible. You guys really, seriously, if you want to dig deeper and actually understand how this market works and how it interacts with others, these are your guys. So I highly recommend it. Go check out Tom and Messari. Appreciate that. Thank you, man. Yeah, guys, as you can see, I'm degenerating here rapidly. But apparently Bitcoin's kind of going up. So I just want to take a very quick look at the charts before we go. which, you know, I always take with a grain of salt, but sort of the same levels on the weekly, right? 39.6 holding for now, 42, 45.5. And then this whole area, I think between 38.4 and 37.7. I mean, these three candles are absolutely absurd. If you look at how much support there should be theoretically in that area. Zooming in here to the daily, still making higher lows. All right. As much as you kind of want to panic here, this is a very, very distinct pattern. As long as we kind of hold this area around 37.2, this is just another high or low in a fresh sort of bullish market structure. Not particularly worried. And, you know, guys, this is a meme, but it's my favorite one. Bullish divergence with RSI on the 4-hour chart, oversold. I told you we were looking for it yesterday. That's happening. And right now looking like it might invalidate hidden bearish divergence. Just looks good. I know. The more panic and freaking out that you see on Twitter, the more I start to get interested. If I was not laid up, I would have longed the hell out of this with some leverage probably yesterday, to be quite honest. But I don't trade when I'm sick and not focused. So that is not happening. Taking a quick look at ETH here on the weekly, as you can see, ETH actually holding its own really well against Bitcoin. It kind of leads into Tom's narrative there. I think there's a lot of hype coming into the merge, and I think that ETH is going to just continue to outperform. I mean, as we zoom in here on these weeklies, that's a lot of demand right there, right? People have tried to sell it off and just basically continuing to buy and show demand. And here it is. Yeah, it dipped below, but holding this kind of 3,000. Got tweezer bottoms right here. I don't think things are as bad as they seem. I don't think things are as bad as they seem. Call me tomorrow when we're at like $31,000 Bitcoin. You'll be like, Scott said everything was great yesterday. No, but I think things are actually looking pretty decent. I ain't worried. Hope you guys enjoyed it. Again, please follow Tom. Check out Messari. It was really nice to get that more of a macro zoomed out perspective on what's going on, which obviously we often miss in this market. Why? Because crypto traders basically generally don't know shit about anything, right? You just look at charts. It's awesome. No, but it's very important to take a look at the macro perspective and get a feeling. Guys, once again, please check out Bullet that way. Please check out Bullish right down there in the description, bullish.com/Melker, I believe. Can't do it if you're in the US. Otherwise, it is pretty awesome. I will be back tomorrow. We've got a epic panel. I know Sam Bankman-Fried's going to be with us again. I'm hoping they're all going to talk a lot too and save me. I know my friend Andrew from Roundly X will be there. A whole bunch of other people. It's going to be awesome. So be there. See you tomorrow. Peace.
That's dope.